A lot of progress has been made since the financial crisis, which did so much damage to the world, including South Africa. The financial health of the banking system is much better than it was in 2007, 2008.
What we learned from the crisis of 2008 is that banks lost their credibility and their trust with society as a whole. So if you look at our report, you'll see that what we emphasize is the fact that rebuilding that trust is fundamentally important, and you rebuild the trust by having a culture within the organization that is about doing the right thing. It's about what you do when no one's looking. And since banking is fundamentally about trust, having the right culture in the organization is critically important.
And the banks have a critical responsibility in society, which goes beyond the board's responsibility to generate returns for the shareholders. There's an accountability much more widely to their customers, but to society much more widely. Banks have an implicit social license to operate, and we have to discharge obligations consistently with that accountability.
If I look at banking in South Africa and I think about my own organization in Barclays Africa, over the last 3 years or more, we've been really focused on ensuring that culture, the sense of the values of the organization, become part of the DNA of the organization.
When we embarked on it in the Group of 30, we kind of assumed that most banks around the world recognized this and had a big cultural agenda. We were disappointed to find that a lot of banks didn't actually get it. They thought the model they were operating with, in which trust was nowhere near what it should be, was adequate. So we believed in the Group of 30 that what was needed was a strong set of recommendations about how important it is for a board to settle on a culture, have an aspiration for how they wanted to conduct themselves and how they wanted to behave, and what they should do to accomplish that desired culture.
Pillar 1 is about the boards. The boards must take ownership of culture, they must understand the culture of the firm, and they must monitor it on a constant basis. Pillar 2 is the senior management. The senior management must embody the culture. They must walk the walk, talk the talk on a daily basis, lead the firm, showing the culture. Pillar 3 is about performance management. It's about training. It's making sure that the employees understand what that culture really is on a daily basis. And Pillar 4 is about your systems of control. It's about the first line taking ownership, it's about the second line making sure compliance is effective, and it's about the audit function at the end.
That doesn't mean to say that we don't all have a lot of work to do, because we do, and that's the thing about culture. Culture is not something you do and then it's done. Culture is something that you have to be focused on all the time, every single day, and every interaction that you have.